Taxation. Government imposes tax. Why do government impose tax? Government impose tax so that they can build that economy that we dream of. They want a better society, but there's no money anywhere. It is people that have been making money, businesses that have been making profits, individuals that have been making income that have to pay these taxes to government. They have the tax burden. So they are the taxpayers. So the money the government takes from the taxpayers is what government is going to use to build up the society. I think that is logically clear, right? Good. So look at what I wrote about taxation. A tax is a levy imposed by government in the production of and consumption of goods and services. Because you have produced certain goods, because you have consumed certain goods, because a business has rendered certain service, because you have received certain service from a business, you have to pay tax. This is what taxation means. So a tax is a levy imposed by government for the production and consumption of goods and services. If you don't produce, you wouldn't pay tax. If you are not earning income, you wouldn't pay tax. So that means taxes will be charged based on what you receive as income. I think that is clear. Great. So, reasons government impose taxes. One, corporation and income taxes can be used to redistribute income and wealth in the economy. What are corporation taxes? Corporation taxes are taxes we pay as a firm because of the profit we have made. So businesses will make profit, yes or no? So the profit, yes or no?
Yes.
The profit they make, they have to pay certain percentage to government as tax. That is corporation tax. I think it's clear. Then income tax. Income tax is the tax we pay as individuals or employees. Because we're working, we have to pay tax. So certain percentage that we have to pay to government based on our level of income is what we call income tax. Is it clear? Great, we move on. Two, it could be used to limit the production of demerit goods. What are demerit goods? These are goods that could be harmful to the health of the consumer. So government will impose tax on these goods so that the production will reduce. Because when taxes are imposed on this type of production, the cost of production increases for firms. And when the cost of production increases for firms might be demotivated to produce. Then the supply will be less. Do we understand? So demerit goods are goods that could cause harm to the society or to the individual consuming it, like tobacco, cigarettes, those that smoke. It's not good for the health. So government might impose tax on this type of goods because they will be harmful to the health of the consumer. So if government imposes tax on these goods, what happens? The cost of production increases. And when the cost of production increases, it could demotivate firms from producing such products. Or the price will increase. And if the price increases, those consumers might stop. Can you just stop that, please? And if the price increases, those consumers might stop consuming it. Though, for cigarettes, the price elasticity of demand for cigarettes is price inelastic. Why? Because people will still consume it, irrespective of what the price is. Is it clear? Is it clear, please?
Yes.
Is it clear? Yes. So we'll go on. The third one, tariffs to help to protect domestic firms. What are domestic firms? Firms that are established in this country, owned by the Libyans. Do you understand what domestic firms are? The Libyans own these businesses. They control it. So government would increase tariffs, taxes on importation. So you will be able to buy goods produced in this country instead of buying from abroad. So government will increase the taxes on goods that are coming from abroad. Then the price of goods coming from abroad increases. And that will discourage you from buying. So you start buying goods from your country, the locally made products. Do we understand? Do we understand this?
Yes.
Are you sure?
Yes.
What we're saying is, government will increase taxation on importation. If government does that, why? Government is doing that to discourage you from buying from abroad. Rather, you buy the local made products. Is it clear?
Yes.
Thank you. So the amount of tax a household and firm have to pay is called the tax burden. So the tax burden is what? The amount of tax you have to pay as an individual. The amount of tax this business has to pay. That's what we call the tax burden. Is it clear? Any question about that? We go to types of taxation. We have direct taxes. These are taxes paid on income, wealth, or profits. So these taxes are paid directly because you have made a profit as a business, because you have received income, or because someone has given you a property that belongs to you now. Do we understand direct taxes? These taxes are paid directly by that individual who has received that revenue, who has made that business that has made that profit. Is it clear? Any question about indirect tax?
No.
So we have indirect taxes. These are taxes paid on consumption. It is called the value added tax. When you have to pay tax because you have consumed a product or because you've received certain service, we call it indirect tax. These taxes are charged because you have consumed. It's not a direct one. If you don't consume, you are not going to be charged for it. So because of your consumption, you have consumed a product that you have bought from a business. Do you get it? You bought from a business, but the business is not being charged. You are being charged. That is why we call it indirect. You are not the one making the business. You are only buying from the business. And for the fact that you bought from the business and you are being charged to pay certain tax, that is what we call an indirect tax. Is it clear? Thank you. The third one, progressive taxation. When we talk about progressive taxation, this type of taxes, it is the more the income you get, the more tax you pay. The more profit your business makes, the more taxes it pays. That's what we call a progressive tax. Do we understand progressive tax here? So look at what I wrote. Under this tax system, those with the higher ability are charged higher taxes. So because you have the ability, you have higher incomes, then you can be charged a high tax. Examples of progressive taxes are capital gain tax. What is capital? Capital gain taxes are taxes against profit we make from the sales of assets. Do you understand capital gain tax here? Income, your level of income, if it increases, that means you are progressing as an individual. You used to get $3,000, now you're getting $4,000, you're getting $5,000. That means you are progressing as an individual. So you can be charged a higher tax on that. Do we understand progressive tax?
Yes.
So it can be graphically represented as this. Look at the graph here, please. If the level of income increases from T1 to T2, the tax charge will increase from Y1 to the tax charge on the income will increase from Y1 to Y2. So if your income increases, this is your level of income. Income, you use Y to represent income. Are you with me?
Yes.
So if your income level increases from Y1 to Y2, then your taxes will be increased from T1 to T2. This is what we call progressive. Do we understand? As your level of income increases, the tax charged increases. Do we get it?
Yes.
So here it means, as the level, you can write this, as the level of income increases from Y1 to Y2, the tax rate increases from T1 to T2. This is what we call progressive tax. Is it clear?
Yes.
So for regressive tax, you will be charged, you have the ability to pay higher tax, but the government, one way or the other, are not charging you a higher tax. That's what we mean by regressive. You have the ability to pay so much in taxation, but government, one way or the other, is not charging you the way you are supposed to be charged. That's what we call regressive. Unlike progressive, you are being charged based on your ability to pay. Do you get it? Here you have the ability to pay, but you are charged less. That's what we call regressive. Do you understand what regressive is here? Yeah. Progressive means you have the ability to pay higher tax and you are being charged higher tax. Regressive means you have the ability to pay higher tax, but you are being charged a lower tax. Is it clear? Yes. Is it clear, please? Yes. So look at what I wrote. Under this tax system, those with higher ability to pay are charged lower taxes. This implies that the higher the income, the lower the tax charged, and can be graphically represented as this. So look at the level of income. The level of income increases from Y1 to Y2. Then the tax charge reduces from or falls from T1 to T2. Do we get it? Yeah. Your level of income increases from Y1 to Y2, but your tax rate falls from T1 to T2. This is what we call regressive. Is it clear? Yeah. So you write this as the level of income rises from Y1 to Y2. Tax rate falls from T1 to T2. I think that's clear. Then we go to professional taxation. So what is proportional taxation? Stop writing, please. Stop writing, please. Okay. So for proportional means irrespective of your level of income, irrespective of the profit you make, irrespective of the wealth you have, you are being charged the same tax rate. That's what we call proportional. Do we understand proportional here? So, irrespective of the level of income. So before I go there, a proportional taxation under this system, the rate of tax paid is the same, irrespective of taxpayers' level of income, taxpayers' wealth, taxpayers' profits. So, how big your business is, how small your business is, you pay the same tax. That's what we call proportional. Is it clear? Yes. So at this rate, a low level income and a high level income pays the same percentage. This is proportional. Is proportional clear? Yes. Regressive, you have the ability to pay more, but you are paying less. Regressive. Progressive, you have the ability to pay more and you are paying more. Not this graph. At Y1, you pay Y1. At Y2, you pay Y2. That is progressive. Do we understand progressive? Yes. Do you understand progressive? Yes. And for proportional, Y1 and Y2 pays the same what? 10%. This is what? Percentage. 10%. Percentage. Taxes are charged based on percentage. Is it clear? Yes. Do you have any questions about that? No. Okay. So we go to this regressive transition. So we go to the examples of taxes we have. We have the income tax. I explained the income tax before. Yeah. Taxes levied on your level of income. And when you talk about income, it could be your salary, your wages, it could be the rent. I think that's clear. Yes. We have corporation tax. This is levied on what? The profits of the firm. As a business, as a company, the tax you pay is called corporation tax. We have sales tax. This is an indirect tax. The business will sell to you as a consumer, the consumer pays the tax. That's an indirect tax, which is the same as what? Sales tax. So they could ask you for an example of a sales tax or an example of an indirect tax. Example of an indirect tax is what? A sales tax. Example of a direct tax is corporation tax and income tax. Are you getting it, guys? Yes. We have the excise duty. It's a tax charge on tobacco, alcohol, and gambling. These are inland things that happens around us. Is it clear? Yes. Yeah. We have capital gain tax. It's a tax charge on investments such as buying of shares or selling private property. So when you sell your private property, you could be charged on it. So when you are charged on it, we call it capital gain tax. You are selling your assets. I told you earlier. Yes or no? Yes. Great. Then we have the inheritance tax. It is charged on the transfer of property of a deceased, someone that is dead. So on the will, the person's will, the person has to transfer its property to you. So transferring that property to you and you paying the tax on that transferred property is what we call inheritance tax. Do you understand inheritance tax? Do we understand this? Stamp duty, a progressive tax paid on the sale of a commercial property. A property like selling your company to other people. You pay what? Stamp duty. Do you understand commercial property here? It's not the same as your private property. Your private property is your private car. It's your building, it's your house. But commercial property is a company. You could sell your company to someone else, yes or no? So when you sell it, you pay what we call stamp duty. Is it clear?
Yes.
Then we have the carbon tax. The tax imposed on firms of vehicles that emit carbon. You know what carbon is, right? Carbon dioxide, you know carbon. So because you emit a lot of emission on carbon, if vehicles emit a lot of carbon, they could pay tax on it. So that type of tax is what we call carbon tax. Is it clear?
Yes.
Then we have windfall tax. A tax charged on individual or firms that gain unexpected one-off amount of money. You just make the money. Example from lottery. You know lottery, right? Lottery. So when you make money from lottery, it doesn't come every day. It's not a regular income. Yes or no? So because it's not a regular income, we call it a windfall. It's a windfall. An unexpected money that you have made. So when you pay tax on it, we call it what? Windfall tax. You just gain that money. From lottery, especially lottery. I think you know lottery, right?
Yes.
Any question about it?